see Cassava having any kind of intrinsic value outside of the Alzheimer's drug?
No, I mean, they're, I think, pretty loud and proud that they don't have anything else other than this one drug. And usually there's some payables and things like that they're going to have to work through if this trial fails. I don't know why they would proceed with the second trial to prove the same thing, but that trial's not cheap, and they'll have closeout costs and stuff like that.
Regarding SAVA, didn't essentially their whole leadership get convicted of fraud like a couple months ago?
Not exactly. An outside scientist who was, very important to the company, but not technically an employee. An outside scientist got indicted, not convicted. So he's arrested by the Department of Justice and the FBI and is charged with fraud, and he remains innocent until proven guilty. The CEO and his wife, the CEO, who I know rather well, who founded the company, I met 20 some odd years ago. The CEO, 𝗍𝗂𝗍𝗍𝗍, and his wife were, in essence, sort of sued by the SEC and resigned at the same time and settled all at the same time. So they had sort of seen this coming for a while. So that's most of the leadership team. Sadly, their chief medical officer passed away, and he was another co-founder of the company, Dr. Friedman. So in essence, the company's kind of, there isn't a whole lot there left anymore in terms of a management team. It's mostly just, will this trial work or not? There's no real company to run.
Yeah.
It's,
Got it.
Clinical events are based on facts, but the reaction of the markets for these clinical events sometimes do not make much sense. In the case of SAVA, it seems like there's a cult of followers, like the GameStop cult or the AMC cult, where they're just pushing the price up no matter the underlying value of the company. How can you fight ignorance, right? Sometimes, even if you short the stock and it makes no sense, people still rally and keep buying no matter what. So it seems like it's probably what's happening right now. But how can you fight that?
Yeah, it's a great question. I've certainly seen cults before. I think one of the things to keep in mind about markets is it's the marginal seller and buyer that moves the price of the stock. It's not the sellers that aren't transacting or buyers that aren't transacting. So all it takes is 1% or 5% of shareholders to say, I really thought this drug would work. It didn't work. I'm not crazy. I'm going to sell. And especially if they can sell at a price that doesn't evaporate all their money, and you usually want to sell before it is evaporated. So what I find is that even if 90% of the shareholders don't change, the price can still drop 90%. And putting new money to work in a stock that's failed is often something that's challenging to do. So I think that especially when your account values dropped a lot, you don't want to add good money to bad. And so I ultimately think it doesn't really matter. And certainly bad news the primary endpoint failing, it's kind of hard to spin. That's the nice thing about phase 3 is that you can build a kind of cult around ambiguous data, but you can't really build a cult when the truth has to come out. And when the sample size goes up, the truth tends to come out because the statistical evidence is more definitive. You have a really high power to determine what happened. And my guess is the ADAS-COG change here will be very, very close to placebo. If not worse, I bet it will be worse than placebo. And that happens a lot in some of these trials where the drug just doesn't work at all, and it's like a coin flip. Because if you're giving 2 placebos, one placebo just might beat the other one by chance. So it's like a 50-50 that the placebo beats it. So I don't think it'll help in any way, shape, or form. And it was very close to what I'm describing right now is basically what happened in phase 2. In phase 2, in the controlled withdrawal study, the drug beat the placebo by 1/6 of 1 point, an ADAS-COG, which was very close to just basically flipping a coin or giving 2 placebos, green M&Ms versus red M&Ms. You're going to get that kind of result. and the p-value is 0.5, not 0.05, but 0.5. So pretty much guaranteed that this result was due to chance. They have this mild subgroup, which did 0.5 point better than the total treatment group, but that's also kind of close to placebo. So I think the difference between the two groups will be something like 1/3 of 1 point for ADAS-Cog, and it's anybody's guess whether placebo beats it or drug beats it, but neither one would be relevant because you really need 2 or 3 points at least in ADAS-Cog to move the needle on the disease. And they're just not going to get that given what we know about the drug, especially what we know, which is that the last time they tried to do this, they got 0.5 point or 1/6 of a point. So in phase 2, I looked at a lot of Alzheimer's trials. You never go up in points as you go from phase 2 to phase 3. So it's really hard for your drug to get better over time. At best, it sort of is getting worse. So I feel, the only people I kind of feel bad for are anyone that's been sort of suckered into putting their whole portfolio in this. If you want to put part of your portfolio, I'm really, I don't, think that's a terrible idea. I do think you're going to lose your money, but you'll learn something about biotech. It's like tuition. You'll pay a little tuition, and you'll learn how clinical trials work, and it's not such a bad thing. But if you have your whole portfolio in this, you really have to, you really have a, penchant for gambling or a desire to hurt yourself, or, some people have self-destructive tendencies. And, I just want to make sure you have the warning. But if you also, think that you just have outsmarted everyone, then my advice is that you just take that skill, that amazing skill you have, where, if you think you can analyze biotech binary events better than me, I've made a living doing this for a long time, then I would say that just do half your portfolio or whatever it is, and you will prove that skill again and again and again. There's a whole calendar of binary events you can buy for $20, or just put one together yourself for free, and you can bet on these types of binary events once a year, 5 times a year, 20 times a year, it doesn't matter, and you'll be very rich. Because as you can see, these binary events cause huge changes in price value, in options value, and so forth. And if you really think you can outsmart me on Cassava, I'm sure there are people out there that are smarter than me in binary events. And if you're one of them, you will get very rich the next time another Cassava comes up, whether it's, you pick your publicly traded company, but there's a number of them that you can just see the binary events coming very shortly. Just take your wisdom, whatever allowed you to outsmart me on this one, and outsmart me on the next one. And, the marketplace is telling you you're wrong, by the way. The marketplace is telling you that, the puts to buy, the put options on the stock are egregiously expensive. People are tripping over themselves, willing to pay 40%. That's mob loan shark money percentages. Don't ask me how I know that. That's the rate of a loan shark. I'm willing to pay 45, 50, I'll pay up to 100% to borrow Cassava shares and short them because it's that obvious. And I once paid 200% to short stock of a company called Mankind. So, if you know what you're doing and you really think you're smarter, again, why take the massive financial risk when you can just take a huge financial risk? Don't put yourself out of business. Just if you have 100% of your portfolio, just do 50. You'll still be rich if you win, and you'll at least have some money left over if you lose. And that's just my prudent advice. I'm not here to talk down to anybody or tell them they're morons or say I'm better than you and you shouldn't own a single share. By all means, own some stock. My first couple of investments in biotech, my first probably 5 years, I was in stocks I had no business being in, and it helped me learn. The tuition was very valuable. One of the first biotech stocks I traded was 𝗏 Systems, which was a company that made a drug called cetuximab. And they got a refusal to file letter. Even though every newspaper said it was a cure for cancer, it was on the front page of Time magazine, and little old me bought this stock, and the stock went down 80% when the FDA said their trials weren't good enough to get FDA approval. And I was wrong. And I was also 17. But I didn't know what I was doing, and I lost the very, very small amount of money I had in it. And I learned something. That was a very priceless lesson. You can see I still remember it to this day, 24 years later. Those whatever thousands of dollars I lost, I guess in today's money, probably more. There's tuition. And then I lost a huge boatload a few years later. I built up my portfolio quite healthily to around $500,000. I was 19. And I lost a huge fortune in a merger. The merger of Biogen and IDEC Pharmaceuticals cost me basically my whole portfolio. And I wish I had somebody to say, Martin, you don't know anything about merger arbitrage. Merger arb deals are complex. It's not really clear here what's going to happen in this merger. But I just said, I really like this deal. I think it makes sense. It's good for both companies. And I was wrong. The market didn't like the deal. It ended up being just a fine deal. But I didn't really understand merger arb. It was my first ever merger arb trade. And guess what I did? I put my whole portfolio in it. If I had somebody to tell me, Martin, put half your portfolio in it. It's still stupid to do that, but at least I would have saved half my money instead of torching it all. So if this is your first biotech big bet, why torch all of your money, potentially? You may be right. But if I kept, let's say I did half of my money in that Biogen IDEC bet, and I was right, at $750K portfolio, do you think I would be upset that it wasn't $1 million? No, I'd be thrilled with the return. It's just greed to say, no, I want every dollar. I put my whole portfolio in it, and I was wrong. So I lost it all. I went from 500,000 to like 2,000. And I remember being on the phone with E-Trade, asking if it was a typo. It was not a typo. And those kinds of lessons are really valuable. And those are the tuitions I've paid over the years to know this. And now when I see new people, every few years, there's a binary event and I short it and everyone says, you don't know what you're doing, et cetera, et cetera. But it's nobody that's done this for a long time. It's nobody that stands up and said, I've been trading biotech binary events for 10 years and you're wrong. It's always somebody that says, wow, this is my first biotech and it sure seems like it's going to work and this and that. And I'm just sitting there shaking my head. Like, I just hope that everybody's protected financially. As long as you're doing that, I have no issue with you. I hope you win for crying out loud. If there was a world where I can win and you can win, I'd be very happy. That world doesn't exist, but I don't wish anybody to lose money. I just think I know what's going to happen here. And, I want to save the guy who's trying to pay his rent next month. I know, Matt Nacktrap should know better to put $70 million in a piece of trash. But, the person with 15 grand that has 12 grand in their account on it, that's not going to be healthy for them. We all want to make 100x in our money. My portfolio could sure use it right now, and I'm sure everybody else's. But at the end of the day, you have to be reasonable and logical about it. And there's no free lunch in the markets. If there's a 100x return, chances are it's not in your portfolio. Chances are it's probably in some venture capital fund that has really good connections with Silicon Valley, and it's not going to be some stock you stumble upon. Of course, there are stocks like NVIDIA that did go up 100x. But in biotech, I would challenge you to find one. It's actually very hard to make that kind of money in biotech, and it's more likely that you're buying a dog than not. So just leave room for that possibility. You don't have to liquidate your position. I don't want you to do that. It wouldn't benefit me anyway. Some people think, I'm just trying to scare you. Stay in the stock for all I care. It's not going to change anything. The results are coming out in a few weeks, and it doesn't matter if you sell or buy, or you can buy 1 million shares. I didn't flinch yesterday when it was up 25%, and I'm not flinching now that it's down 20%. It's just a matter of, take care of your own portfolio, because I've been there before, and it just does not feel good after the fact. And all the dopamine rushes that you get now making the big bet, the feeling is 10 times worse when you lose the big bet. And, that's just sort of where I'm at with it. So anybody else want to chat or have a question? Or
Balin here. Sorry, I was muted earlier.
Balin, sorry. I always called you Ballin.
Something, who cares? Yeah, I'm new, so I apologize if my verbiage is terrible. This is my first, big short. And yesterday I flinched a little, but I'm safe and insulated enough that I can handle the big swings. But, what I don't understand is as a newbie trader, I don't see how, the volume and liquidity keeps entering in at such a rapid amount when there's something as blatant as a website like Cassava fraud or whatever.
Yeah.
This is a lot more pertinent to, this particular biotech company I'm saying. But somebody who trades, SVIX, a little bit of volatility, I know I'm doing stupid, degenerate things, but it seems more degenerate that hundreds of millions of dollars could enter this company yesterday. And I'm just a little confused on that. But
Sure.
I understand totally like SEC like delaying out filings and stuff, but it just seemed like so much liquidity that I'm stupid here, and I'm like any help would be appreciated.
No, I don't think that's you're stupid. It's $1 billion market cap, and I'm just pulling up on my Godel, which is the alternative to Bloomberg I've created. I was going to say I'm pulling up on my Bloomberg, which I usually say, but I made my own version. It only traded 4.6 million shares yesterday, which, if you think about it, that's $100 million, and it's a 1.2 or so billion dollar company. So about 10% of the shares outstanding traded yesterday. Now that's a lot, but the company's entire existence comes down to the next 2-3 weeks. So at the end of the day, it kind of makes sense that many people are nervous. I'm sure somebody maybe tried to engineer a short squeeze yesterday. That didn't work very well. It had been known that I was writing a report. I was just showing myself writing the report, literally. So maybe there was a sort of timing with that. It could have just been a fund saying, I'm going to do this or do that. It's even though the stock trades around 1 million shares a day, if a fund wanted to buy or sell a couple million shares, they could easily move the stock. Then there's the options market. And then there's kind of this thing that's sort of come over the last 5 years where firms like Susquehanna, 2Sigma, and Jane Street have gotten very big, and a couple others have gotten very big by like just basically acting as market makers in options and equities. So even myself buying puts, they become short puts, and that means that they have to short the stock to hedge themselves. So there's a lot of weird things that can happen in these types of situations where there's a big pressure cooker, and people make adjustments to their portfolio at the last minute. I think there's people that know that this is the closest thing you can get to a lotto ticket in the stock market, where if you're right, you will make 100x. But in the lotto, you know what the odds are. You can actually calculate them. Here, I really do believe the odds are 0. And that's why I'm kind of sitting here folding my arms and saying, I feel like I have to say something. I also like the fact that I can kind of stroke my ego a little bit and preen and say, well, I know this drug's not going to work, because it seems like something like that could be random. And I don't like to stick my neck out for other things. Like 𝗎𝗎𝗓 is a stock that I think will fail their primary endpoint, and there's a whole bunch of others I have just a list here, but I don't feel that confident that I'm going to write a 40-page report, publish it, make a website, put my name on it, do all of that, because I just don't know. I'm not certain about everything. About once or twice a year, sometimes every 2 years, there comes something across my desk like this where it's like, okay, it just physically cannot work according to the laws of physics, chemistry that I've studied my whole life. I've seen so many drugs. It's just not going to happen. And, I wrote why. I only wrote probably about half of what I wanted to write. There's so many crazy things about this company. They claim that their drug, for example, works through a protein called alpha-7. But what's funny is somebody found that they actually use the alpha-1 antibody to run their alpha-7 experiment. And the alpha-1 antibody won't pick up the alpha-7. And so when you look at the results where they say our drug works through alpha-7, you're sitting there saying that you must have made those results up, right? Like how could it be that the alpha-1 antibody works on alpha-7? And the other data they put out is like clearly fraudulent, and the unprecedented arrest. I've been arrested myself. In the hedge fund world, getting arrested is kind of like a rite of passage. I'm joking, of course, it's not true. But, about 25% of the top hedge funds that ever existed got tore down by law enforcement. So it is a hazardous place to work, especially when you make tons of enemies as a short seller, as I've have. Science is not a treacherous place to work. You should be able to put papers out, publish, and not get arrested. And this is maybe one of the only times in human history where a scientist has gotten arrested for lying about their results. And maybe as we enter a bigger information age society, that'll happen more and more. But fraudulent science almost got to a point where we just accepted it. I've tried to replicate lots of studies I've seen in very prominent journals and have failed to replicate. And in weaker journals, like Cassava published in one journal where it took 6 days for peer review. And I can't even set up a peer review, for a big paper. Just the process of like setting up a peer review after the
after it's been accepted, it'll take a month or two at least to get accepted, another few months to do peer review. And if a journal is saying, okay, in 6 days you can go from submission to publication, that's not a journal. That's just a pipeline to printing. That's a self-print, basically. It's a preprint. So, I think that, it's fairly obvious what's going on here, but I think that lotto ticket is something that human beings just can't avoid. So Paul Tudor Jones once said, the best trading advice I have for any new trader is to cut your biggest position in half, because it's probably too big. And I think that's true. But again, those are lessons for down the road. The first lesson is, Cassava's, I think, not going anywhere. Anyway, anybody else have a question, comment?
Your take on these two folks coming over now instead of just waiting till, a couple weeks to see how this turns out. And then, hey, if it's favorable, then coming to the company. Why risk your reputation and leave a company to come over to Cassava Sciences now with the data so close to being released?
It's a great question. And of course, I respect all people, regardless if they like a stock or dislike a stock. That's not a reason to disrespect anybody. One thing to keep in mind about employment is that when you join, that's the day you get your options. That's the options price you lock in. So if you are going to get 2,000 call options for joining Cassava, and it goes up to 200, you much rather get hired at 26 than at 200. If that makes sense. You'd be leaving a couple million on the table. So if you're bullish on it, you'd join now before joining later. The next thing I'd say is, if you hire a headhunter and give them $100,000, you're going to find employees. It is not hard to find people who want employment. It could be something like they hate the job that they're at, they're moving. There's so many circumstances where people say, I've been at Biogen, they never promoted me. I'd much rather be a big dog at this company than a small dog at Biogen. It feels like a promotion to me. As long as the company's got the cash to pay my salary for the next year, I can't control if the drug works or not. My job is to control, whatever it is I'm doing, marketing, clinical trials, whatever. And if the drug works, great. I'm the ground floor of something huge, and my options are going to make me very rich. Or I'll find another job in 6 months, the same way I found this one. And I just hang my hat and I have nothing to do for a year, which if I signed a 1-year contract or something, it's actually kind of smart. I get my options for free. I'm getting my salary guaranteed. If the drug fails, I basically got a year to look for a new job because I'm getting paid for a year. So it ain't a horrible move if you're looking for a new gig. If you're in a high-placed position where you're doing really well, I'm not sure I'd leave my job. And I don't think that applies to sort of either person that's joined Cassava. Biogen's sort of been on hard times for a while. It's not the Biogen of yesteryear. It's been on hard times for a really long time. But it's certainly, just because you hire somebody from a bigger company doesn't mean they're good. In the software world now, I've interviewed people at Facebook and Google, and they've talked about coming over to work at my company, and I wouldn't hire them, under any circumstances. And if there's people at Google and Facebook where I couldn't hire them under any circumstances. So big companies have geniuses, they've got mediocre people, and they've got terrible people. And, you can't tell which one is which without digging really deep, talking to people in the industry, asking about their reputations, seeing why they left, all that stuff. They may have hired a fantastic person, in which case, good for them. They may have hired a terrible person, in which case, too bad. But I don't think either of those will change the results. And I certainly don't think anybody knows the results at this point, which would be, very remarkable if they were able to know the results and then tell the results to the prospective employee. That
was going to be my second part of this question was, do you think there are any NDAs signed when they come over, maybe some biomarker data that hasn't been released that they're sharing with the folks they want to hire? Because from all accounts, they have very good resumes from what I've seen.
Never say never, for sure. I mean, it's possible, but they certainly wouldn't have the 𝗓𝗏𝗏 data. And I do think that one of those two was not presently employed at the time. And I think the other one, I don't know what the circumstances are exactly, but if you're Rick, maybe you just want to, the executive team has been hollowed out a bit. Maybe you want to refill it, and you found a few people to help refill it, and that's fine, But if it seems to me like it would not be something where, sharing that clinical data, if I had the clinical data and knew it was good, I wouldn't be hiring anybody. I'd be putting out the results, saying, I've got the next $5 billion drug, $10 billion, maybe even $20 billion revenue drug, and I want the best person at Amgen. I want the best person at Gilead. I want the best person at Eli Lilly. I don't think that's what's happened here. I think they basically, hired two people that, are joining the team, and that's fine. I've hired hundreds of people in biotech, maybe even 1,000. And, I think you don't give them non-public information. You try not to. And you basically just tell them what Wall Street knows. And, I'd be surprised if any more information went across the desk. But, never say never. I just don't think my intuition and instincts are that it's not what happened, but it's possible.
Okay, thank you.
Sure.
Hey, Martin.
Martin, quick question. I'm just looking at the holders list, and you have the typical, Blackrock, Bank of America and stuff. But
𝗏𝗏𝗘𝗢.
do you see anybody that's holding any lists on the holders list that has some level of sophistication, or I know that certain funds, like let's say Commodore Capital is, I think they're very smart, and they, I kind of follow them and their holdings, but. Any listed anyone on this list that has
Yeah.
some level?
Well, I'll go through it. I mean, BlackRock, Vanguard, State Street, these are and Geo. These are all indexers.
Yeah.
Susquehanna and Citadel and Jane Street are market makers, so they're probably just hedged. Affinity Asset Advisors is, I think, a biotech fund. My guess would be that they're short. They're a biotech fund that focuses on binary events.
Okay.
And they have a position in the company. They're probably the biggest hedge fund in the company. But my experience with this kind of stuff is that they're short. I don't know those guys. I maybe came across them at some point in my career, but I certainly don't remember them. And if I look through the holders list, sometimes you can look through the 13F. Sometimes you can actually see that they own puts and stuff like that. And, there's something about boxing shares. If anybody's not familiar, boxing shares is when you long a stock and short it at the same time. And you might ask, why would you do that? You don't have any economic exposure. That's right, you don't. But when the time is right, you can short the stock. So I've just looked at their, my system is incorrect. I just looked at their investment in Cassava. It's all puts. So they don't own any stock. They just own puts. So that's an example there. There's one called LMR Partners, which again, I'm not terribly familiar with. I think that's probably the same situation. So, it's surprising to me because there was once upon a time, there was a company called 𝗓𝗏𝗃𝗧𝗏. And 𝗓𝗏𝗃𝗃𝗧𝗏 had a big investor called, they were this big hedge fund that no longer exists. They were called, it sounds like Armistice, but it's not. It's Addicus. They were called Addicus Capital. And they were one of the biggest hedge funds in the world, interestingly. But they had this big, weird position in this stock everyone was short. And I got to meet the guys and got to know them, and they're perfectly nice guys, very smart. But they ended up being wrong on this one, but you could at least call them and they could explain why they had this big position in a stock everyone thought was a dog. It had the same situation as Cassava. It dropped 90% and they were never heard from again. But in that case, at least somebody owned the stock. Here, I can't find a person with a pulse that's a professional investor that owns it. So LMR is also has calls and puts, so they're not actually long. So to me, it's like, it seems like anybody I talk to that's a professional biotech investor is short, or they certainly are avoiding it as a long only. Usually there's somebody you can find that likes the stock as a contrarian or something, but I can't even find that. And I know a lot of people on Wall Street. I mean, it should not be that hard. Every fund I'm looking at that has a position is usually hedged or has puts or like something like that. So I can't find anybody that has more than like $1 million or something in there.